Morning, everyone. Looking at the US stock markets, the Dow has again recovered from the 23,500 points level, forming the triple bottom formation. Since then, the Dow has recovered towards the 25,000 psychological level, but the lack of fall-through buying interest beyond that has seen the Dow pulling back just towards the EMA 120, which is around the 24,250 points level and forms a mild recovery pattern. So this could be the short-term breakout, pullback, and the continuation pattern that we're expecting the Dow to trend towards the 25,000 psychological level. Once there's a fall through buy interest beyond that, you might see further upside towards the 25,800 points, followed by the 26,600 points level. In the meantime, should the Dow breach below the 24,250 points level, we might see further pullback towards the previous support, the 23,500 points. The Dow has seen some of the mild weakness on overnight, falling about 0.1% after trimming most of its intraday losses. On the S&P 500, we did see the S&P 500 has recovered from the 2600 psychological level towards the recent resistance around the 2750 level. Recently, after hitting the 2750, we are seeing the mild pullback just towards the EMA 120. So this could be the short-term breakout, pullback, and the continuation pattern that we're expecting the S&P 500. Once there's a fall through buy interest beyond the 2750, further upside will be seen towards the next resistance located at the 2800 or even towards the 2870 level. In the meantime, the immediate support will be located towards the 2675 level on the S&P 500. Unlike the Dow, the S&P 500 has made some of the mild gains, about 0.1% after recovering most of its intraday losses due to the gains in the technology shares. On the crude oil prices wise, we are seeing the crude oil prices has then retreated from the recent peak of around the 73 US barrel mark. Since then, the crude oil prices has violated below the 70 or the EMA 20 level and subsequently staged the healthy pullback. This could be the healthy pullback that we're expecting the crude oil prices to see how the 62 level holds. If should there be a recovery along the 62 US barrel mark, we might see further upside for the crude prices towards the 70 or even towards the previous peak around the 73 US barrel level. In the meantime, should crude prices violate below the 62, then we might see further corrective phase towards the 60. But for now, we are still taking this as the good higher high and also the higher low formation. The uptrend is still very much intact on the crude prices. So for now, the recent weakness could be just temporarily before the next upward to resume. Okay, some of this on our local front. The FMKLCI has again endured some of the weakness towards the 1710 level, forming the double bottom formation. Alone, the FMKLCI has hit the 1710 level back in November or December last year. Subsequently, once again, we did see the FMKLCI has retreated from the all-time high around the 1895 towards the 1710 level. After hitting the 1710 level, we did not see any fall-through selling pressure. Instead, we did see some of the bargain hunting activities on the FMKLCI. That we are seeing this could be the technical rebound towards the 1760. Until we can see a breakout above the 1760, only we can confirm that the FMKLCI is braced for further recovery towards the 1800 psychological level. In the meantime, the 1730 will serve as the immediate defense for now, followed by the recent support level, which is located towards the 1710. On the lower liners wise, we are seeing the pullback along from the FM small cap index towards the previous support level around the 13,700 points. And on Monday itself, we did mention that we are expecting the lower liners to see some of the nibbling or bargain hunting activities to continue towards the 14,250 points level. Until we can see a breakout above the 14,250 points, then only we can confirm for further recovery towards the 15,180 points level. In the meantime, any pullback will be located towards the support level, which is at the 13,700 points level on the FM small cap index. On stocks wise, some of the stocks that we can watch out for will firstly will be Bavest, which has recovered from the 84.5 cents level, or the EMA 120 level. Since then, we are seeing Bavest forming the potential symmetrical triangle formation breakout above yesterday's high, which is located at the 1 ringgit and 25 cents level. Once price crosses above the 1 ringgit and 25 cents, we're expecting price to head towards the previous peak around the 144, or even towards a new high at the 1 ringgit and 50 cents level. Your stop loss point will be located towards the 1 ringgit and 11 cents should price breach above the 1 ringgit and 25 cents level on Bavest. This could be the healthy short-term breakout, the pullback, and the potential continuation pattern for Bavest towards the 144 level, given that price has already formed the bullish candle yesterday, accompanied by some of the high volumes being traded. On indicators wise, we are expecting the MACD indicator to give us a buy signal once price crosses above the 125, whereas the RSI has been maintaining its position above the 50 level over the past 3 to 4 weeks trading period. On Comfort, price is still on a technical rebound phase, forming the higher low formation. Recently, we are seeing Comfort has formed the recovery along the 69 towards the 88.5 cents level, and on yesterday itself, we did see Comfort Glove has breached above the 88.5 cents level and subsequently retested the EMA 60 level, accompanied by some of the mild improvement in volumes. Following the breakout above the 88.5 cents, we are expecting Comfort to continue to trend higher towards the 97.5 cents, or even towards the 1 ringgit and 4 cents level. Your stop loss point will be located below the 80.5 cents level for Comfort. A lot of glove companies like Harta Laga, Kosan, and also Top Glove has been forming the higher high, also the higher low forming. Most of them are near their all-time high level. So Comfort could be one of the laggards compared to the glove manufacturing giants. For Emulus, price is also still on a technical rebound phase for now. And recently, we are seeing Emulus has formed the triangle formation breakout yesterday. As price closed above the EMA 60 level, or the trend line formation around the 35.5 cents level, accompanied by some of the improvement in volumes. Following the breakout above this trend line above the 35.5 cents, we are also seeing the MACD indicator has already issued a buy signal yesterday, whereas the RSI has also risen above the 50 level yesterday as well. With the breakout above the 35.5 cents level, any pullback for now will be a healthy pullback for investors to digest is yesterday's gain before the next uptrend will resume for Emulus towards the first target price at the 41.5 cents towards the 44 cents level. Your stop loss point will be located below the 32.5 cents, and if you can take further risk, the final defense will be located towards the 31 cents. So the immediate support is at 32.5 cents, followed by the final defense 31 cents. Last two company for the day firstly will be Masterpack. Masterpack Group has earlier recovered from the low of 55 cents level. Since then, we are seeing a consolidation breakout above the 59 cents recently, as price staged a rally towards the recent peak of around the 73 cents. After hitting the 73 cents, price has formed the bearish candle on the next day itself, and subsequently price staged a healthy pullback just towards the EMA 120 and traded on a sideways manner. So this could be the potential breakout, a pullback, and the continuation pattern, as price has already formed the bullish candle yesterday. So for now, we'll be monitoring for the breakout above yesterday's high of 67 cents. Should there be follow through by just beyond that, we're expecting price to trend towards 73 cents or even towards the 76 cents level. Your stop loss point will be located towards the 61.5 cents on our master. Last company for today will be JShell System. JShell has earlier formed the double bottom formation, or the W-shaped formation breakout above the 1.16 cents level. Since then, price has staged the breakout, a pullback, and the continuation pattern was established. And recently, we are seeing some of the higher volumes being traded on JShell System again, that we're going to monitor for the next breakout above the 1 ringgit and 52 cents. Should price and close above the 1 ringgit 52 cents. We're expecting price to continue to trend higher towards the 162 or even towards the 1 ringgit and 67 cents or 68 cents level. Your stop loss point will be located below the 1 ringgit and 34 cents. Should price breach above the 1 ringgit and 52 cents, we're expecting the uptrend index formation to be established. The EMA 9 60 EMA 920, 16, 120 could be in line should price breach above the 152 level over the near term period. If you have any questions, you can put in your chat box and I'll reply you shortly. For Carex, price is still on the downtrend formation for now. However, we are seeing some of the bargain hunting activities was being formed over the past couple of days. Price has again hit the recent low of around the 49 cents level, and we are seeing the 2 days of bargain hunting activities towards just the EMA 9. For now, if you want to trade on Carex, you need to monitor for the next to see if there's any fall through buy interest above the 60 cents. Should price reach above the 60 cents, then you can continue to trade on this counter towards the 65.5 cents or even towards the 69 cents level. So for now, any recovery, we just take a technical rebound play until we can see a breakout, the pullback, and the continuation formation to be established. Then only you can confirm for the recovery pattern. Should price breach above the 60 cents and you were to enter above that, your stop loss point will be located below the 54 cents level. On DRB Highcom, price has found some of the support along the 1 ringgit and 65 cents level recently, and it did stage a 1-day recovery towards the EMA 20 level, but there's no fall through by interest on the next day itself, and subsequently the RBI has pulled back and traded on a sideways manner. However, we are seeing some of the recovery play on DRB Highcom accompanied by some of the rising volumes being traded over the past 6 to 7 trading days. So for now, we'll be monitoring for this potential trend line breakout. Until we can see this trend line breakout above the 2 ringgit and 6 cents level, only we can confirm that the RBI Highcom could be heading higher. For now, if you're interested to trade, you can continue to trade on the RBI Highcom towards the 2 ringgit and 6 cents. Then you can take some of the profit. If price were to breach above the 2 ringgit and 6 cents, then you can continue to hold on to this counter towards its next target price at the 227 or even towards the 247 level. Your stop loss point will be located below the 1 ringgit and 72 cents if you're interested to trade on our DRB Highcom. And short Hub Sing. For Hub Sing, you still can short on this counter given that price has continues to trend higher. Trend lower. It has already breached below the previous gap down formation below the 1 ringgit and 10 cents level. If you want to short on this counter, you can short it towards the 1 ringgit and 6 cents level. But if price were to gap up, opening at the gap up place, then you can forget to. Then you don't have to short on this counter already. If it opens at 110, 1 ringgit and 9 cents or below, then you can continue to short on this counter. If there's no further question, that will end the morning briefing for today. Thank you.